You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is April 19th, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Thursday. Metals surge on sanction worries. Nickel was on a tear Thursday, soaring 4% on fears that U.S. sanctions on major Russian aluminum producer Rusal may be broadened and could hit key Russian nickel supplier Nornickel. Worries over a tighter global supply for a commodity already in deficit have seen nickel jump 20% this week, while aluminum is also up around 2% on Thursday, has racked up more than gains of 30% so far this month. Second thing to know is oil hits 3.5-year high ahead of OPEC meeting. Amid the broad surge in commodities seen Thursday, oil prices also hit their highest level since late 2014, while traders looked ahead to the outcome of the Joint Organization of Petroleum Exporting Countries and non-OPEC Ministerial Monitoring Committee meeting slated for later this week. Third thing to know is jobless claims and Philly Fed data and Fed jawboning looms. The Labor Department releases its weekly count of the number of individuals who filed for unemployment insurance for the week ended April 13th, expected to show jobless claims fell to 230,000 from 233,000 the prior week. Continuing claims are forecast to fall to 1.848 million from 1.871 million the prior week. Fourth thing to know is earnings will continue to be in focus. Earnings will continue to move stock prices on Thursday, with Wall Street set to trade good news as all 6 S&P 500 firms reporting after the prior session's close beat estimates. Of particular note, American Express looks set for solid gains after the blue chip credit card issuer's profit topped consensus, as record investments in card rewards and a strengthening U.S. economy contributed to higher customer spending. And the fifth thing to know, stocks are set for a weak open ahead of earnings and data. U.S. futures pointed to a slightly lower open on Thursday as investors waited for earnings and economic data to give direction for the day's trade. Our second story today is from Bloomberg.com. Back to future for VIX curve signals volatility's new normal. I don't know if those words actually go together the way the author thinks they should, but that's what it says. Welcome back, tranquility. The first stages of restored market calm are underway, suggesting that a sky-high CBOE volatility index isn't the new normal, unlike what so many observers warned about after the recent turmoil. Instead, traders are pricing derivatives in a way that suggests equity swings will soon ease even further. The VIX futures curve is back to normal. The curve tracks the implied volatility of the S&P 500 over time and typically forms an upward sloping shape called contango, where contracts for months further out are priced higher than near-term ones. Put simply, traders usually demand a premium for the future since it's less certain. After the February turmoil, the curve inverted, a telltale sign of stress called backwardation, as investors forked over a premium to protect against ongoing volatility. If history is any guide, a shift to contango means we could expect the VIX to hover around 14 to 15, according to the head of derivative strategy at Macro Risk Advisors. When we see the curve go back into contango after a long period of backwardation, a period of volatility normalization typically follows, he said. The curve uninverting is a fairly reliable signal. Our next story today is from investing.com. U.S. jobless claims fall by 1,000 in the latest week. The number of people who filed for unemployment assistance in the U.S. last week fell less than expected, according to official data released on Thursday. The number of individuals filing for initial jobless benefits decreased by 1,000 to 232,000, the Labor Department said. Analysts had expected claims to fall to 230,000 last week. Figures for the prior week were unchanged at 233,000. And that, ladies and gentlemen, is news you can use for today, April 19th, 2018. Your Options News Rundown. I'm Dan Passarelli. Trade smart and have a great day.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.